Hello and welcome to today's video on day trading rules. Day trading is an exciting and potentially lucrative activity, but it's important to remember that it also involves significant risk. In this video, we'll discuss some essential rules and tips to help you manage risk, make informed decisions, and increase your chances of success as a day trader. Rule number 1: set realistic goals. One of the most important aspects of day trading is setting realistic goals. While the prospect of making large profits quickly may be tempting, it's essential to approach day trading with a long-term perspective. Setting achievable daily or weekly profit targets that are in line with your level of experience and risk tolerance can help you stay on track and avoid taking on too much risk. When setting your profit targets, it's important to consider your trading strategy and the market conditions. For example, if the market is particularly volatile or unpredictable, you may need to adjust your profit targets accordingly. Additionally, it's important to remember that consistency is key in day trading. Small profits that are consistently earned can add up over time and provide a solid foundation for long-term success. Another important aspect of setting realistic goals is managing your expectations. It's important to remember that day trading is not a get-rich-quick scheme, and success takes time and effort. While it's possible to make significant profits as a day trader, it's also important to be prepared for losses and to have a plan in place for managing risk. Rule number 2: risk management. Risk management is a crucial aspect of day trading. Day trading involves taking on a significant amount of risk, and it's essential to have a solid risk management strategy in place to protect your capital and minimize losses. One common rule in day trading is to never risk more than 1 to 2% of your trading account on any one trade. This helps to limit potential losses and ensure that you have enough capital to continue trading in the future. Additionally, it's important to have a stop-loss order in place for every trade to limit your losses if the market moves against you. Another important aspect of risk management is diversification. Diversifying your trades across different markets and asset classes can help to spread out your risk and minimize losses if one market experiences a downturn. It's also important to have a plan in place for managing risk during periods of high volatility or unexpected events. Finally, it's important to remember that risk management is an ongoing process. As your trading strategy and the market conditions evolve, you may need to adjust your risk management strategy accordingly. Rule number 3: plan your trades. Before making any trade, it's essential to have a clear plan in place. This includes setting entry and exit points, stop-loss orders, and profit targets. Planning your trades in advance can help you make informed decisions and avoid impulsive trades based on emotions or rumors. When planning your trades, it's important to conduct thorough research and analysis to identify potential trading opportunities. This may involve analyzing market trends, technical indicators, or fundamental data. Additionally, it's important to consider your trading strategy and risk management plan when planning your trades. Another important aspect of planning your trades is being prepared to act quickly when the time is right. This may involve setting alerts or notifications for key market events or using automated trading software to execute trades based on preset criteria. Rule number 4: stay disciplined. Discipline is crucial to success in day trading. Sticking to your trading plan and avoiding impulsive decisions based on emotions or rumors can help you stay focused and avoid taking on unnecessary risk. This may involve practicing patience and waiting for the right trading opportunities or sitting out of the market if there are no good trading opportunities available. Another important aspect of discipline is managing your emotions. Fear and greed can cloud your judgment and lead to impulsive decisions that can be detrimental to your trading strategy. By staying disciplined and sticking to your plan, you can avoid making rash decisions and make informed decisions based on data and analysis. Finally, it's important to remember that discipline is an ongoing process. Maintaining discipline requires constant effort and vigilance, and it's essential to regularly evaluate your performance and adjust your trading plan and risk management strategy as needed. Rule number 5: stay informed. Staying informed about market trends, news, and events is essential for success in day trading. By keeping up to date with the latest developments in the market, you can identify potential trading opportunities and make informed decisions about when to enter and exit trades. There are a variety of tools and resources available for staying informed about the market, including financial news websites, social media platforms, and trading forums. Additionally, it's important to conduct your own research and analysis to validate the information you receive and make informed decisions based on your own assessment of the market. Another important aspect of staying informed is understanding the market conditions and how they may impact your trading strategy. For example, if the market is particularly volatile or experiencing a downturn, you may need to adjust your risk. Rule number 6: practice patience. Patience is a key trait of successful day traders. While it can be tempting to jump into the market and make trades based on impulse or emotion, taking a patient approach and waiting for the right trading opportunities can help you avoid unnecessary risk and make more informed decisions. Practicing patience may involve sitting out of the market when there are no good trading opportunities available or waiting for a clear signal before entering a trade. Additionally, it's important to avoid making impulsive trades based on rumors or emotions, as these can often lead to poor decision-making and unnecessary losses. Continuous learning and improvement. Continuous learning and improvement is essential for success in day trading. Markets are constantly evolving, and it's essential to stay up to date with the latest trends, strategies, and tools to remain competitive and achieve long-term success. There are a variety of resources available for day traders to learn and improve their skills, including online courses, trading forums, and mentorship programs. Additionally, it's important to regularly evaluate your trading performance and identify areas for improvement. This may involve analyzing your trades and identifying patterns or developing new strategies to address areas of weakness. Finally, it's important to maintain a growth mindset and be open to feedback and new ideas. By continuously learning and improving, you can adapt to changing market conditions and achieve long-term success in day trading. Conclusion. Day trading can be a highly rewarding and profitable activity, but it requires discipline, patience, and a strong understanding of risk management and market conditions. By setting realistic goals, managing risk, planning your trades, staying disciplined, staying informed, practicing patience, and continuously learning and improving, you can develop a successful day trading strategy and achieve long-term success in the market.
They call me a